When I first started investing, I thought making money was easy. I didn't understand how markets worked, and I was basically guessing where price would go. Losing money motivated me to learn as much as I could about investing. The first strategy I learned was DCA. Today, I want to share a unique way of using this method that is very different from what you usually find online, but the one I made the most profit when I started trading. Make sure to watch until the very end to have a complete understanding of this concept. DCA stands for dollar cost averaging, which is an investment strategy that involves regularly investing a fixed amount of money into a particular asset, regardless of its price. The goal of DCA is to reduce the impact of market volatility and lower the average purchase price of the asset over time. While there are numerous approaches to using DCA, I'd like to highlight just two for the sake of this video. The first, a more traditional approach, is fixed time frame or date DCA. It involves investing a set amount regularly, such as every month. This method is well suited for buy and hold, long-term strategies. The second method is price target DCA, which requires more active involvement and market analysis. It can potentially lead to higher returns over the long term. In our case, we won't be targeting specific price levels, but rather we'll focus on benefiting from price swings in trending markets. This approach is ideal for shorter-term investors and traders looking to capitalize on oversold and overbought price levels.
Nice.
This method is also suitable for shorting the market. Stick around, and I'll explain everything you need to know about it. As you know, this channel primarily focuses on trading using indicators, and the strategy I have for you today is no exception. The first indicator we'll be using today is a ready-to-use strategy that you can find on TradingView. It's called the Wave Trend Oscillator by Epic Wasteland. As you can see, we have the Wave Trend Oscillator here, which is very similar to the stochastic and MACD indicators. You might say it's a blend of both, even though it has a unique appearance. Depending on your chosen settings, it provides you with clear buy or sell signals when it moves beyond the overbought or oversold thresholds. Moving on, we also have a backtester at your disposal, though it's specifically designed for long trades. It's a valuable tool when used correctly. Now, let's take a closer look at the backtester data I have here. This chart depicts the 4-hour Bitcoin USD chart. I've tweaked the settings quite a bit to achieve this outcome, aiming for more favorable numbers and visually appealing entry positions on the chart. Here are the same exact settings so you can get an idea of what can be modified. Feel free to experiment with it, but please, avoid using it blindly. It's essential to note that trading strategies carry inherent risks, and I must emphasize that this is not financial advice. One of the most common mistakes novice traders make is falling for the promises made by individuals trying to sell their trading strategies.
I'll make you rich.
What they often fail to mention is the presence of drawdown. For traders with smaller account sizes, this level of drawdown could be a game ender. But don't worry, I've got a solution to help you minimize that troublesome drawdown when using this particular strategy. The majority of these significant drawdowns result from trades taken against the prevailing trend. For instance, if you were to buy here, here, and here, you'd end up with losses. However, if you'd limited your trades to those in line with the trend, the majority of them would have been profitable. This is the key to evading a substantial drawdown and reducing your losses. As you can see, a significant portion of profit was generated during this period when the price was in a strong uptrend. Conversely, the most substantial losses occurred during a downtrend. To identify the trend, we'll be using multi-time frame EMA cloud by Ripster47. It's basically two EMAs displayed as a cloud ribbon. For our strategy, we'll use a 150 period EMA as a short period and a 300 period EMA for a long period. Make sure you have the resolution set to chart. We'll use this ribbon as an area of value and buy on a pullback when the price is trending. You might wonder why we're seeing so many signals pointing in a single direction. This is precisely why I've labeled it a DCA strategy, even though it might appear rather distinct from traditional methods. The backtester offers a valuable feature. In addition to adjusting settings and assessing how the strategy might perform, you can also experiment with position size and quantity. As you can see, based on a $10,000 account, trading with these settings could potentially yield this profit by splitting the position into 4 equal portions, each accounting for 25%. This means you'd be making purchases at different price levels based on the oversold signals from the wave trend. The number of portions and position size can be changed to your preference. You see how powerful it is? The ribbon is still green, which means the price is still trending, and you're getting a few more opportunities to buy at a lower price before the price continues to rise. When it comes to exiting your position, the indicator will trigger a sell signal when there's a first crossover in the wave trend above the overbought area. The backtester's results are calculated based on this criterion. You can choose to follow it blindly if you believe that historical price behavior will repeat itself. Additionally, you can even connect it to virtually any trading bot to automate your trades. In this case, I'd recommend setting a stop loss based on the average buying price of the asset. This way, you can avoid any unpleasant surprises while you're away from the screen. However, it's essential to periodically review the bot's settings as adjustments may be necessary. It's not always a straightforward process. On the other hand, if you enjoy actively monitoring charts and have more time at your disposal, you can explore alternative stop-loss and profit-taking methods. These may include employing a fixed risk-reward ratio based on the average position price, or remaining in the trade as long as the ribbon remains green. Another approach is to exit the position by selling portions of your profit as the price continues to rise. If, however, during the pullback, EMAs have crossed, it might be a signal that a trend is about to reverse, and you might consider exiting your position. If you have any questions or need further clarification, don't hesitate to leave a comment below the video. I'm here to help you navigate this strategy. Let's quickly recap so you don't get overwhelmed by all the information we discussed today. First, ensure you're satisfied with the backtester settings and the historical results it provides. Second, determine how or if you want to divide your position into portions. Obviously, this strategy can be used as well as a regular trading tool, without using a DCA concept. Next, once you're confident in your setup, start looking for a trade entry opportunity. To do that, keep an eye out for a green ribbon and a price pullback. Finally, during the pullback, wait for a buy signal given by the wave trend indicator. Lastly, always have an exit plan in place. Now, as promised, here are the main points to look for if you want to short the market. First, you can't rely on a backtester, as it only works for the long trades. It's up to you if you want to keep it on the screen. It still provides you with a visual entry point applied over the price chart. The only difference compared to long positions is that here you only have a first entry signal without dividing your position into smaller portions. However, for this, you can use the oscillator. It displays all of the buy and sell entries. Next, you want to be looking for a price pullback while the ribbon is colored in red and the sell signal given by the wave trend indicator. The same previously mentioned risk management principles apply here. With patience, commitment, and the right strategy, you'll be on the path to becoming a successful trader. My mission is to provide you with the tools, but the rest is up to you. I genuinely believe that this strategy can help you become that trader. It's simple and holds a lot of potential. Let me know if you think you can benefit from it and share your ideas for future projects. I'll analyze them and maybe create another strong tool for you. If you enjoyed this video, please give it a like. Your input means a lot to me. As always, thanks for watching, and I'll see you in the next one.